what I want to do is take this to the next step and talk a little bit about option strategies that you as an investor can actually utilize in your trading, and more importantly, how you can access some of the tools that are available to you here in the Nordics to leverage and implement some of these strategies. So what I'll start off with is talking about a simple option strategy, generating income using options. And we're not going to get into advanced strategies. We're only going to talk about strategies that any of you who have currently owned a stock or an ETF in your portfolio can potentially leverage, doing something that you're already currently doing, but may not have thought of using options as the way to go about trading them. Then we'll talk a little bit about the OptionsPlay platform overview to give you a sense for how you can utilize some of the tools that are available to you here in the Nordics in order to analyze the strategies that I'll discuss here today. And then most importantly, I want to show you how you can utilize our income opportunity reports. These are reports that we generate on a daily basis to show you where are the best opportunities to generate the most income with the Nordic markets, and then show you how to execute those trades in your Nordnet account. We have a way to quickly for you to analyze a trade and then find that trade within the Nordnet platform. And then show you some of the upcoming options education, because I know many of you that are here today are relatively new to options and you're still learning. So we have ongoing options education. I'll show you how to access that so that you can not only get consistent market outlooks sessions where I talk a little bit about the Nordic markets and the different sectors and what's currently moving, as well as macroeconomics, but also teach you on specific option strategies. And then we'll open this up for Q&A here at the very end. But my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, which is the tool that all Nordic investors have access to for free because of the partnership that we have with Nasdaq. So everything that I'm going to show you here today, you'll be able to access, and I'll show you how to do that at the very end. But the primary strategy that I want to introduce here today for those of you that may be either experienced options traders or just getting started with options trading is what we call a covered call. And a covered call is a strategy that is suitable for anyone who is a stock investor. If you invest in stocks or ETFs, covered calls are a way to allow you to generate income on those assets that you own in your portfolio, but at the same time, allow you to potentially sell the stocks that you own at a profit. Because if you think about the stocks that you own them for one specific reason. You generally own them because you think that the stock is going to rise in value. And what you want to do is you want to sell that stock at a higher price sometime in the future in order to profit from that. So as an equity investor, most traders are used to placing a limit order. So let's say I have H&M stock. It's currently trading around 214 crowns. Maybe I think the stock is going to increase to 230 crowns. So what would I do as an equity investor? I would place a limit order at 230 crowns and wait for the stock to rise. But as a cover call investor, I can obligate myself to the same thing, sell a 230 call option. And what happens is the difference between a limit order and a cover call is that I get paid income to sell that cover call, which actually has, like I said, the exact same obligation as placing a limit order, but doing so by selling a call option. So a cover call is simply selling a call option against a stock position that you own in order to generate income on that existing stock position. Because when you sell a call option, you have the obligation to sell the stock sometime in the future at a specific price. Now, what does that sound like? That sounds exactly like a limit order. The difference between the two is that when you sell a cover call, you get paid premium, or the buyer of the call option is paying you premium. That's your income. Versus if you place a limit order, you're not paid any income at all. So when you think about a limit order and a cover call, same obligations, but one pays you income and one you are effectively getting paid nothing to wait for the stock to rally. But there are a couple limitations with the strategy. It's important to understand that limit orders and cover calls are not the exact same thing. A limit order you can place for any number of shares. So if you have 2 shares of H&M or 2,000 shares of H&M, you can place a limit order for that amount. When you're selling a call option, each contract you sell is only for 100 shares of the underlying stock. So you can only sell in 100 share block increments. So if you own only 50 shares, you cannot sell a cover call. If you own 250 shares, you can only sell 200 shares of it through a cover call, meaning you will still have 50 shares remaining. So you have to trade in 100 share increments. That's one limitation. And the second limitation is that if I place a limit order at 230, as soon as the stock reaches 230, my limit order will get filled and I will be out of the trade. With the cover call, you have to wait until the expiration date for the stock to be above the strike price in order for your stock to sell. So there are a couple of limitations that you have. So it's not a direct comparison, but the two are very similar to each other. But the important part is to understand that when you're selling a cover call, you're going to collect premium, meaning you're going to get paid. And the income stream that you get paid is going to allow you to generate an income stream that's usually at least 2 to 3 times what you may collect on the dividend as you wait for the stock to rally so that you can sell the stock at a profit. And each time you sell a cover call, there are 2 possible outcomes. Either the stock reaches your target price. Let's say I'm looking to sell the stock at 230. Now, by the expiration date of the cover call, the stock can either be above $230 crowns or below 230 crowns. Those are your 2 possible options. Now, if the stock is above the strike price, you effectively sell your stock at the target strike price. Similar to a limit order, once the stock reaches that price, you get filled on your trade and you sold your stock potentially at a profit. If, let's say, the stock is below 230 crowns by expiration, at that point, you keep 100% of the income that you collected on that cover call. And what you can do is you can sell another cover call and collect more income and continue to wait for the stock to rally. And as long as the stock stays below the strike price, you can continue this cycle. And this is what we call a consistent income stream that you can generate from selling cover calls. And what you're going to find is that the average yield on a cover call is typically larger than the dividend yield that you would collect on a stock that you own. So I want to show you how to actually find opportunities like this, because we publish a cover call and short put report. We're going to talk about the cover call report here today. And the cover call report is organized for you based on the annualized return. So how much income are you actually collecting from that cover call? And what we do is we scan every single optionable symbol in the Nordic markets, and we sort it based on the annualized return. So if you look at the live report here, I'm going to show you the live report here. This is the report that you'll have access to, and I'm going to show you how to access this at the end of the session. But these reports are generated and sorted based on the annualized return. So what you can do to utilize this report is to simply go down the list of stocks and find the stocks that you own in your portfolio. Let's say you own Nokia as a stock that you own in your portfolio. This is saying that if you own Nokia, you can sell the October 15th 57 crown cover call, and that's going to collect roughly 1.2 crowns. Now, 1.2 crowns on a 57 crown stock is a raw return of about 2.27%. What that means is that you're collecting 2.27% of the stock's value in exactly 50 days. Think about dividend yields. Usually we tend to see most stocks have a dividend yield of 2-3% on the higher end. Occasionally we see one even higher, about 4 or 5%, but usually they're in the 2 to 3%. But that's 2 to 3% per year. This is 2.27%, 227 basis points in just 50 days. And what that annualizes out to, if you do that year over year, is 17% annualized return. So this is the type of yields that you can collect as you wait for the stock to rally. And keep in mind, the stock is currently trading, the stock is currently trading at 52 crowns, and we're telling you to sell the 57 cover call. And that allows you to basically wait for the stock to rally up to 57 between now and the expiration date. And what we have built into this report is the ability to simply click on the trade link here on the right-hand side to analyze this trade further using the OptionsPlay platform. So when you click on the trade link here on the right-hand side, what it will bring up is the OptionsPlay platform, which I will walk you through right now. The OptionsPlay platform is available to all Nordic investors completely free of charge with the current partnership that we have with Nasdaq. And what you're able to do is, whoops, I clicked on the wrong symbol, I think. Nokia. One second, my computer seems to have frozen. 1 second. Let's click on this link here again. Here we go. And when you click on the link, what it will bring up is the exact trade that we were looking at and in the OptionsPlay platform. And the OptionsPlay platform is designed to help you analyze a specific trade. As you can see here, I'm collecting 2.27% of the stock's value. That's the raw return, which annualizes out to 16.5% return over the next 50 days. So Nokia, if you own the stock, is a stock that pays 0 dividends. So if you're holding Nokia stock and you're waiting for this to rally, you're not getting paid any income while you hold on to it. This supplements that income stream at about 2.27% every 50 days. And if Nokia rallies up to 57 crowns, you are able to take profit and keep this 2.27%. If Nokia does not rally up to 57 crowns, then you keep the 2.27% and you can come back and do this all over again and perhaps collect another 2% over the next 50 days. And you might be able to do this multiple times. And one of the things that we have here is a metric called probability of expiring worthless. As you can see, it says about 76%. What that means is that I have about a 76% chance I'm going to keep the 2.27%, and I can do this all over again next month. So if I do this 4 times over the next 4 months, I'm going to expect 3 out of those 4 times I'm going to be able to keep my premium. And the 4th time I do this, likely the stock will rally up to that strike price and I will sell my stock potentially at a profit. So these are the analytics that you can use to quickly look at a trade, and you can use the cover call report. Like I said, you go down this list, you look for stocks that you own. I know there are some very popular stocks here like Evo Gaming, Embracer, some of the names that people have really started to pick up during the pandemic. You can go across the screen, click on the stock, click on the trade link here on the right-hand side, and quickly analyze the trade that you're looking at. And one of the great things about the OptionsPlay platform and the links that we've built with Nordnet is that if you're interested in placing a trade, you can click on the trade button. And what we've built is this short code here on the right-hand side. So this Nokia October $57 call option, you can copy this short code and you can paste it into your Nordnet account. On the right, when you're in the options chain, you can go to search on the upper right-hand corner. You type in, or you copy the Nokia symbol that I just posted. Let's see. I'm not sure why the Nokia symbol wasn't coming up, but this one, LUMI, is coming up when I click on it. When I post this short code here in Nordnet, when I paste this into Nordnet, as you can see, it'll find the options call that I'm looking at, and I can look at the current bid ask and start executing a trade to sell this cover call. And this is all designed to make the process for finding the trades that you can potentially generate income on your portfolio using the cover call report very quickly, using the OptionsPlay platform to analyze the trade to understand how much yield are you collecting over what period of time, and what is the probability of you keeping that income, and what is the probability of the stock being called away, and being able to quickly click on the trade button and execute that trade into your Nordnet account within just a few minutes from full, start to finish. And that's really why we built this platform, and the tools that we have included here today is to help you take the things that you've learned, such as strategies like cover calls, but more importantly, show you how you have access to the tools to be able to actually implement these strategies in your own portfolio. And the new trade button that gives you the short code that you can instantly post into your Nordnet account is designed to help quickly make an execution or the trade as quickly as possible. So with that, I'll just quickly go through the OptionsPlay platform, just for those of you that are interested in other strategies as well. The platform itself we built this to help investors, regardless of how experienced or new you are with options trading, to quickly find opportunities and analyze different option strategies for your portfolio. The tool itself is divided into 3 sections. You have trade ideas and watch lists on the left-hand side. In the middle, we have our security analysis panel. And on the right-hand side, we have trading and income. And these 3 panels is what we call the what, why, and how of options trading. Because when you start your day, you want to know, what symbols should I pay attention to? We have fresh trade ideas that are scanned for you based on technical indicators in the morning. And you can also have build your own watch list. We have pre-built watch lists for all the major Nordic markets that you can quickly utilize, or you can create your own watch list so that you can click on a symbol and instantly populate the rest of the screen. And not only do we provide you with underlying data for this stock, such as 1 month and 6 month trends, technical scores, so that you can quickly gauge the directional view of an underlying stock, but also things like earnings and dividend data, so that you can quickly look at that type of information before you make a decision. And then you can either select I'm bullish on the stock and see 3 bullish strategies, or you can select I'm bearish to see 3 bearish strategies, depending on your view of the underlying stock. And we will always compare 3 strategies for you, such as buying the stock. So if you're brand new to options trading, you're probably familiar with buying the stock. The simple option strategy, buying a call option, something that Phil referenced before in the session earlier, and then also a more advanced strategy, a vertical spread. And even if you don't know anything about these 3 strategies, you can compare them side by side. You can look at a historical chart and you can say to yourself, what if AstraZeneca got back to its new 52-week high around 1,060 crowns. You can type those outlooks into the P&L simulator here at the bottom part of your screen, and you can see how much would you make if you bought the stock. You look at about a 3% return. If you bought the call option, you're looking at about a 23% return. On the call spread, you're looking at a 54% return. And being able to compare strategies, even if you're not familiar with those strategies, and get a sense for how much can you potentially make, and also how much can you potentially lose. What if AstraZeneca does not cooperate and it goes back down to this 950, 960 support level here? If it does that, if you bought the stock, you're looking at about a 6,000 crown loss. If you bought the call option, you're looking at a 3,200 crown loss. If you bought the call spread, you have only a 2,590 crown loss. So not only do you have the smallest risk with the strategy on the right-hand side, you also have the highest return if the trade goes in your favor. And that's why this vertical spread here on the right has an OptionsPlay score of 104. That's higher than the call and higher than the stock. It does a lot of the work for you so that you can quickly find a strategy, analyze it, and if it's a trade that you want to make, you can click on the trade button and take any of the short codes and copy it into your Nordnet account and potentially enter this for execution within just a few seconds. So that's just a very quick overview of the platform, the different tools that you have access to. And this is just showing you what we have to offer. So I just give you a sense for some of the educational series that's coming up in the next few weeks. You can sign up for that educational series here at trade.optionsplay.com/OMX. You'll be able to have access to, Nordic Market Outlook series that I do every single month, where I talk about where the Nordic market is from a macroeconomic perspective. I look at the major equity indices. I look at the sectors and what stocks are moving. And then twice a month, I do options education sessions. So the next one I'm doing is an option strategy rapid fire session. I'm going to cover a lot of different option strategies and kind of what the best practices is for each one. And I'll also talk about some of the more advanced strategies, debit and credit spreads here in October. So really looking forward to that. So if you want to sign up for this, you can. It's all free at trade.optionsplay.com/OMX. I will post this link into the chat window here in 1 second. And then if you want to sign up for the platform, like I said, the platform, the cover call reports, all free of charge to you. You can do that at optionsplay.se. I will post this into the chat window here in the live stream. So optionsplay.se to sign up for the full platform, and to sign up for the upcoming events, trade.optionsplay.com/OMX, which I will also post into the chat window here as well. So with that covers what I wanted to share with you here today. I really appreciate you guys taking your time this evening to learn more about options trading, and I want to thank Nordnet and Nasdaq for hosting this fantastic event. At this point, what I'll do is I'll open this up for a few questions.
Thank you very much, Tony. Well done. Well done indeed. I know there are already a lot of Nordnet users in Norway using OptionsPlay. And I think actually most of the questions we received were initially on how do I get access to OptionsPlay, but I think you just showed that very well, and I know that Nordnet has already been kind enough also to share the link in the comment section. So I think everything seemed crystal clear.
Yeah. And I would just, hi Tony, I would just say, provide the message on behalf of the customers. They very, very, very good presentation. We got a lot of feedback on your presentation, and everybody thinks it's very good. So thank you so much for that. It was really a really good and powerful walkthrough with a lot of learnings. So I guess a lot of customers will download the OptionPlay now.
Yeah, please go ahead, utilize the platform. Like I said, it's completely free of charge. We do education every 2 weeks. So hopefully I'll see you guys here on the next education event, learn more about options trading, and have access to these tools. So with that, thank you so much for having me, guys.
Thank you so much.